Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. An immediate countering, higher opening, bullish long harami yesterday, after the previous session's higher opening, bearish opening, long black Mariposa and bearish engulfing pattern. The market opened just under the congestion from August 2014, between 101.55 up to the September 2014 high at 103.34, containing the extension to the bright pink neckline, which is currently at 103.08. And that's of the March to April 2024 head and shoulders top. We saw a small dip before prices pushed up through the congestion, but came to a halt just ahead of the next congestion at the August 22 high at 105.49, and dropped back down to close right on the top of the 101.55 to 103.34 congestion. Looking further below, and we have congestion between 98.75 and 98.89, containing the 50% Fibonacci line of the 2022 to 2025 move at 98.89, and the September 23 high at 97.68, which had been the base of last Friday's action. Meanwhile above, we have the stratified congestion, mainly dating from 2014 at 106.79, 107.46, and between 108.27 to 108.62. So far today, a higher open, but then an immediate drop down through the 101.55 to 103.34 congestion, but stopping short of testing the next support. And that's the November 22 high at 99.61, before bouncing back up again, initially within that 101.55 to 103.34 congestion, but now we're just edging up over the top of that. Spot gold, a second indecisive consecutive pattern yesterday, this time an indecisive doji cross after the previous session's indecisive spinning top pattern. Prices dipped once more below the important and key 50% Fibonacci line for the whole late January action at 49.99, but did not close below it, opting to close right on it again. Additionally, the dip below did not manage to reach any of the combination of the next 50% Fibonacci line, the one for the late December 25 to late January 26 move at 49.31, as well as the rising green short medium moving average, currently 49.36. Prices nevertheless stayed below the early February to mid-March small bull channel, which is currently at 52.20 to 56.23. Now, such a move down gave us a primary target in the 49.68 zone, a target that arguably could be reached last Monday for low at 49.66. Then a secondary hard to reach target X1 not too far down at 48.95, and a tertiary much harder to reach target X2 down at 47.35. Now, despite the bearish targets, the dominant long-term pattern and showrunner here still remains the dark blue late December 25 to early February 26 bullish shift pitch hook, with the market a little under the dark blue middle time above, currently at 51.91. Now, so far today, we've been rotating around that important key 50% Fibonacci line at 49.99, but we've now taken a move down towards that 50% Fibonacci line below at 49.31, and also the green short medium moving average. So it'd be interesting to see what happens when we get there, if we get there. Bitcoin, an immediate countering bearish dark cloud cover pattern yesterday after the previous session's bullish closing white Mariposa and 7th bullish white soldier. The cap on the market was the pierced, though seemingly still effective, dark blue upper bull channel line, currently at 75.234. And that's of the key and overall pattern here, which is the dark blue early February to date bull channel, currently 65 75,565 to 75,234. Prices dropped down through the congestion, made up for the March 24 high and the April 25 low at 73,779 and 74,444, respectively. Dipped just below these but closed right on the April 25 low. Further down we have congestion at the lesser Fibonacci line at 72,023, which is just above the perhaps interesting 50% Fibonacci line of the November 22 to October 25 move at 70,929. Going back to the dark blue bull channel, this pattern continues to raise a question as to whether this is a potential halfway hesitation for a much lower market or a potential basing action for higher prices. Additionally, we still have the bigger picture just about hanging on, a very large October 25 to date bearish halfway hesitation. The primary and secondary targets for this pattern have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 even zone. I am on the verge of retiring this target unless we see some strong and distinct moves lower and very soon. So far today, well, not much. The market seemingly trapped more or less within the 73,779 to 74,444 congestion right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.